First, I want to thank Gemstar Productions for hiring me as the production accountant a month ago, and then graciously raising my salary. I am excited to present the company's financial statements in this quarterly meeting.
I will present 4 financial records for Gemstar Productions: the balance sheet, profit and loss, budget versus actual statement, and statement of cash flows reports.
Let's start by looking at the balance sheet, which is a statement of our assets, liabilities, and capital for the year's first quarter. As you can see by this chart on the screen, our assets are a compilation of cash, supplies, vehicles, and vendor deposits. These assets have been purchased to keep the business running. The balance sheet numbers indicate that Gemstar's production is using its resources to make a profit. In this first quarter, our net income is $4,833, and our total assets equal $65,066.
As we divide our net income by our total assets, we get a ROA of 7.428%.
This percentage indicates that Gemstar Productions' finances are in a favorable spot. I have also compared these numbers to our competitor Digital Moonshot, which has not done so well this year. Their ROA is about 4%. These records indicate that we do not need to change the company's strategy in sales and managing assets. Let's take a look at our return on equity ratio. This quarter we brought in a net income of $4,833, and our total equity is $24,833.
As we divide our net income by our total equity, we will get an ROE of 19.462%.
Gemstar Productions can breathe a sigh of relief as this percentage is high and has been stable for the past 3 years, which indicates that our business is strong and we do not predict any foreseeable bumps in the future. Let's take a look at our debt to assets ratio. In the first quarter, we took out a $40,000 loan, which is substantial, but we also have $66,000 worth of assets. So the calculation will come out to be around 66 or 67%, which is high, but keep in mind that we just took out this loan a month ago, and we are a startup company. Now let's look at Gemstar Productions' profit and loss statement. This financial record indicates that Gemstar Production has been profitable in the first quarter. As you can see in the first quarter, our events have generated $11,400. Our expenses totaled $6,567. And to calculate our profit, we subtract our costs $6,567 from our total business revenue of $11,400, and we see that our gross profit is $4,833. Now let's look at the statement's individual components, compare the actual results to the amount budgeted, and find insights into the variance. For the first quarter, we budgeted $12,000 in event revenue, but the exact amount is $11,400, which gives us a variance of $600. We over-budgeted because we expected 200 more people to attend an event that was canceled due to rain. We budgeted $300 for utilities, but only spent $220, which leaves a variance of $80. This variance in utilities happened because we started turning the light off at night, allowing us to save $80. We anticipated $3,400 to be spent on payroll expenses, and the actual amount was $3,200, which leaves a variance of $200. This was because we miscalculated the number of holidays in a year. We took out a truck loan in the first quarter and underestimated the amount it would depreciate. We realized that the drivers were logging more miles due to errors, which caused the depreciation to go up. We budgeted $250, and the actual amount was $297.
We took out a loan for $40,000 and budgeted $245 in interest payments, but the actual interest was $233, leaving us with a variance of $12. This variance is because interest rates fluctuate.
We budgeted $900 on office supplies, and the actual amount spent was $667, leaving us with a variance of $233. This variance was because we received office supplies from a company going out of business. We budgeted $1,000 for our insurance on the company vehicles, and the actual amount was $1,200, which leaves us with a variance of $200. This happened because one of our drivers got a ticket which increased the monthly insurance cost. We will need to adjust our budget to reflect the ticket increase. Our last expense is equipment rental. The equipment rental business gave us a promotional deal which helped us save money. We budgeted $890 and spent $750, which leaves us with a variance of $140. As Gemstar's production continues to grow, these reports will show us the relationship between our expenses and revenue, and hopefully highlight trends or areas where we can cut costs or see if our expenses are growing disproportionately. The last financial statement we will examine is the statement of cash, which acts as a bridge between the income statement and balance sheet by showing how money moved in and out of business. The statement of cash flows has 3 sections: operating activities, investing activities, and financing activities. As you can see from this chart, our net cash provided by operating expenses is $4,653.12. If we analyze this section, we can see that accounts payable provide $1,420 in cash by lowering costs with our suppliers by adopting an app card program.
We have used negative $13,953.12 in our investing activities. We have lost $14,250 in the value of our vehicles.
Since we have a negative, it indicates that our company has made poor asset purchasing decisions, and the negative cash flow from investing activities might be a warning sign. We need to look into this and make some adjustments.
Our net total in the financing activities is $60,000.
We took out a loan of $40,000 and invested in the common stock of $20,000. This positive number indicates that cash has come into the company and is boosting our asset levels. As we look at the inflow and outflow of cash in our company, it must be noted that our operating activities are over budget and do not generate enough cash flow. This is not so impressive and needs to be monitored to ensure that we stay profitable.
Since the last production accountant was terminated, I immediately created 5 internal controls.
1. Segregation of duties as an internal control. Segregation of duties assures that no single person has all the information or authority over financial transactions. Access controls. I would set up an internal control that restricted access. The better the access controls require users to present credentials that verify who they are and that they have access to those accounts. 3. Double entry accounting. The third internal control would be double entry accounting. Double entry accounting requires 2 entries, 1 debit and 1 credit, for each transaction. This system ensures a record for every financial transaction, which helps prevent fraud and embezzlement. 4. Limiting physical access to cash. A functioning petty cash system includes internal controls to ensure that all transactions are recorded. The manager can enforce the system by keeping a log of all cash transactions, locking the box, or reconciling the petty cash to the log and sum you have on hand. 5. Internal audit. Once the damage has been contained, I would do an internal audit to identify possible reporting and data collection problems, to ensure that we have done all necessary to prevent anyone from misappropriating funds.
As you can see, I have learned a lot this month while employed with Gemstar Productions.
I have learned that deposit at vendor, cash, vehicles, customer deposits, loan payables, interest payables, supplies inventory, and common stock belongs on the balance sheet, while equipment rental expense, depreciation expense, office supplies expense, and utilities expense are expenses, so they are found on the profit and loss statement.
Once again, I want to say thank you.